So we're gonna kick this thing off and get started. So first off, I just wanted to welcome everybody to the ARBOR Advisory Council Podcast. So the ARBOR Advisory Council is something that we put together. We took our top originators last year in volume and units, and we created the ARBOR Advisory Council. We recognized them at our holiday party, and we definitely wanted to kind of tap into the ARBOR Brain Trust and get into the minds of some of the people at the company that are doing exceptional volume and units, and find out what makes them tick, find out more about them, and hopefully pull out some tidbits and some advice from them that could help all of us to just be better at our craft. So with that, our first podcast that we're doing is with Mike Wright. Mike Wright is I don't know if you guys had a chance to read his kind of what I put in the original invite. He's been doing it for, I think, around 19 years. He joined ARBOR, I think, 2 years ago, perennial $100 million producer. And really just is somebody that's on the team that he is a seasoned veteran. And last year, I think he did just over $78 million in 2022, which by all accounts, right, he's going to give a thumbs down for that year. But for most of us, like even myself personally as an originator as well, I would have loved to be able to do even sniff anything like that. But it was a down year, so we definitely want to hear from Mike on how he was able to do that. So with that, Mike, can you just introduce yourself and give us some background on how long you've been doing it, kind of like maybe some stuff on your personal side, family stuff, et cetera?
Sure. Yeah. No. Thanks for having me, Ryan. For the first one, it's just first podcast I've ever done, so I'm excited. I've been, like you said, I've been doing it for about 19 years. I was a professional baseball player prior to, and when I got released and fired from the San Francisco Giants, I didn't know what I was going to do with my career. Didn't know what I was going to. I had a business degree, and fell into the mortgage business just by chance. My wife, who at the time was my girlfriend, I was living at her parents', guy across the street, was a branch manager for a bank here in Orange County. He's like, "Hey, what are you doing?" I'm like, "Oh, nothing, just surfing." And he's like, "Well, why don't you come down and try the mortgage business?" And that's how I got started. He put me on a 6-month draw. He taught me the business. At that time, it was kind of a refi boom, so it was really good as far as learning the business, taking a loan app, understanding the terminology, the acumen, how to put a deal together. And that's kind of how I started. And I was in the banking world for 4 or 5 years, and then quickly realized that I was limited, and I shifted. I got my broker's license in 2007. And then I hooked in with a smaller brokerage, and then ended up with a bigger brokerage where I was there for 13 years, and then transitioned to ARBOR 2 years ago. 2 years ago? Year and a half ago?
Yeah.
So that's kind of how I started. I had no idea what I was doing when I first started. I was thrown to the wolves. I was given a kind of a roadmap of how really good originators who I was surrounded by at that first company, how they did business. And it was really just kind of grassroots stuff, pound the pavement.
But when you say grassroots and like pound the pavement, like I know, and I feel like, today it's interesting. That's something that, we are all relying so much on like social media and like flyers and different types of new marketing stuff and things that like almost like a better and a faster way to do it. And it's like in terms of going back in time and kind of reminding everybody and all of us, like what is it like when we talk about pounding the pavement, like what specifically were those best originators doing, and what do you probably of that process do you still do today to bring in business?
Everything I do today, I did back then.
And what like give us some of your top items that you're doing.
I go face to face. I'm not sending emails every day. I don't send rate sheets. I provide information when I go and speak with realtors or CPAs or financial advisors. I will go and provide information, what's in the market, what's going on in the market. I try to differentiate myself with different value propositions, different products. So I started with that. I went to Chamber of Commerce meetings. That's how I got my first realtor back in the day, and he still works with me to this day. And that was a huge kind of transformation, and that grew and blossomed into many different relationships.
So time. when you say face to face, so you mentioned like you face to face is kind of that's we're getting. I think a lot of people have a hard time today because there's so many different angles to go on a passive like almost like a passive marketing other than going face to face. How do you approach getting that face to face meeting, right? So if you want to meet face to face with somebody, are you piggybacking off a successful transaction?
Yeah.
How are you finding that person then opening the door for that face to face meeting?
Yeah, so I will I actually talk to the listing agent more than I do the selling agent, because most of the time I have a relationship with the selling agent who's referred me the deal. So I try to get more granular and more communicative with the listing agents, so I can build a rapport with them. And then I will go and I'll just drop in. I'll just say, hey, are you available? Hey, are you around? When are you in the office? And I kind of know like when the office meetings are on certain real estate brokerages. And they'll say, yeah, I'm here, I'm there. And then I also try to go to every good real estate team has a team, right? So it's like the law of large numbers. Most of the people I work with, they have a team. Some are 3 people, some are 15, some are 20. So I try to get in with the leaders of those teams, or I'll piggyback off the transactions. Like if I do a deal where it was turned down by 2 other people who they used, right, or they had a bad relationship with or a bad experience with, that's when I capitalize, because it's a success story, right? If we pull a deal together that nobody else can do because of our platform, I'm going to expose that and try to capitalize on that. And that's what I do.
And you've talked a lot about the real estate market, like realtors. What percentage of your business and referrals would you say you get from realtors versus like, I know that you have some relationships with some other bankers, right, that don't have access to niche products. Like what would you say you break down your referral business to, like by bucket?
A lot of it's past client now, a lot of repeat clients. Realtors are probably 50%, I would say.
That's 50, good. That's good to know. Yeah.
50%. In past clients, I get a lot of past clients that are moving up, or they're buying investment properties, or they're buying second homes. You mentioned the banker thing. Yes, that is a very key component, and that's knowing your competition and who can do what, and what can't they do, right? And there is tremendous opportunity. Realtors are realtors. It's like the unnecessary evil, right?
The necessary evil, yes, it is for sure.
Necessary evil, I should say. Yeah. But and they're great, and I've got really great relationships and fantastic real estate partners. And the beauty of our business is we can work with who we want to work with. But if you think about it from a numbers perspective, like I'll say Wells Fargo. Wells Fargo controlled what'd they do? 24% of all originations. You know how many loan officers they have right now? They have 1,500 loan officers in their company. You know how many deals get turned down at Wells Fargo? Thousands.
Right.
Thousands. Why is that? Well, their underwriting is very difficult. They're 50-yard line, and that goes for all the big banks. So how many deals are they getting called on? Like, how many people call in, right? They've got their banking centers, and there are people that are sitting in branches. Those people don't know how to put a deal together.
Yeah.
They don't.
Well, this is such an interesting angle, right? Because, for so many of us right now in the independent lane, broker, banker, right? Our Achilles heel right now is jumbo. It has been for a while, right? We're always searching for that great jumbo. We always want to tangle and compete with the banks, right? We want to, it's like we get that jumbo loan and we cringe when we know that they've got $1 million at B of A, or they've got like a private banking at First Republic, like we're going to get smoked. But what's so interesting is for like kind of with your kind of concept there and perspective on those loan officers and the amount of volume, like they're going to win those deals, right? So we might as well just kind of like hand those over to them, because they've got just as many turn downs, if not more, for us that they can't do on, like jumbo bank statement, jumbo, all, whether they can't use business income for reserves, or they don't have enough months reserves, and all the different guideline layers. So it's kind of an interesting way that you can, I guess, win in the jumbo market, right? By pulling out.
I don't want that guy.
Yeah.
I don't want a paper, W-2, $2 million guy wanting a $4 million loan, because I'm going to lose. And I know that. But
so on that note, how do you, so, and that's one of those things that I've seen in your business, right? Like you're, you definitely have a really good handle on non-QM. Like what percentage of your business do you feel you do is non-QM?
Oh, geez. Hold on, I'll tell you.
And just to be clear, like qualifying non-QM, right? This is, you would say in your mind, right? Non-QM for you is going to be like bank statement, P&L.
Bank statement, DSCR, bridge financing, cross collateral, asset depletion.
And you've got all that there. And so how much of that do you do?
That's probably, it's like 54% of my business.
So 54%, and let's just round up to 80 million. So you did a little over 40 plus million non-QM last year. Okay. Yep. And so I want that to sink in with, with the people on this podcast, right? And the audience, right? That, you've got an originator here that did close to 80 million, and 50% of his volume, 40 million of it is on non-QM.
2021, I did 121 million.
Yeah.
74 million of it was non-QM.
Yeah, so those are huge numbers. So I guess that might be something that I think the people on this call are going to be really interested in, right? Is of that production, right? Is that just, are you making yourself, so when you have those face-to-faces with those realtors and you have those, obviously you're talking to bankers, like how do you position yourself, or are you going out there and just saying, hey, this is what I'm great at, like send me this?
I have a yes mentality. It's a yes mentality.
Walk us through that. What does that mean?
Okay, so our platform, has if you need money, we can find it. There's so many resources for us to put deals together. The linchpin is you taking it upon yourself to understand who can do what, right? What product works with what borrower. After you get everything, you've got all the deal put together. What angle can I take? Where can I go with this? Okay, so I have a sheet. I go, okay, I'm looking at the deal. Well, this is how it'll work full doc. So I start, okay, full doc, can it work this way? No, it can't. Okay, then I go to the next angle. Okay, can I use, are they self-employed? Business bank statement, 12 months, 24 months. Can I go that route? Sure, I can go that route. What if I need additional income? Do they have assets? Okay, I look at the assets. Can I use asset depletion?
So you just waterfall them down the product line. But when you start with that referral source, basically when you say the yes mentality, you're going in there and saying, hey, look, guys, I can do any, like, is that kind of the pitch that you make I
don't really make a pitch because everybody, based on experience, I guess, and just doing this for 19 years, I'm kind of like the garbage disposal, and that's kind of how I built my business.
That's a pretty expensive garbage disposal, or a pretty profitable one, right? Like, well, that's awesome.
Truth be told, I never was the guy that they went to first. And I still am. I'm always the guy that comes in second. I get the deal. Oh, hey, this deal fell out. Can you help us? Sure, let me take a look at the deal. And 9 times out of 10, I can find an angle, and that's the thing, is knowing the angles.
Yeah, and I gotta say, and I'm just gonna kind of not for shock value, but just I think again, it's important for people in the audience to understand and taking something Mike's telling us right here that, look, as a second, almost like a second chance lender or that fallout lender, that fallout option, he's been able to build a practice that brings in over $100 million of volume, set $80 million last year in what was probably the biggest down year that we've had in a long time, by really not necessarily having to go out and challenge for that, the juicy 2 million W-2 borrower putting 40% down on that deal. He's found, again, that the riches in the niches. So I think that's great for people to hear.
That deal. So I like really challenging deals. That's what really excites me. It's like, how do I put this together? How do I find the angles?
That's awesome.
How can I get the realtor, paid? How can I make the borrower happy? How can I make the seller happy? What angle can we take? And then
just to summarize on this point, right? Obviously, so what I guess, what would you say, like, just to kind of reiterate where we started, of all the practices that you use, what do you think is your best business practice, or that you use to capitalize on new business?
On new business.
Or even existing, like what is something that you do, like it's part of your routine that you feel like it just works and it's part of your process? And if you're going to say, hey, look, guys, do this one thing, and this is really going to improve your business, or give you, like, maybe help you bring in more production.
Answer your phone. Answer your phone.
Yeah. Well, and then so that is a great tip. Let's say somebody's phone's not ringing. Right. So you're talking, so we have people in the audience that the phone does ring, but
okay, how do you differentiate yourself? Okay. Well, all you have to do is go to, how many emails do we get a day with different lenders providing different products? Okay. Focus on one product, whether that's non-QM, whether that's construction to perm, whether that's reverse, whether that's first-time home buyer with down payment assistance, VA, FHA, debt service. You have to know your market, right? And there's different markets. Like, so for example, I do a lot of business in Long Beach. I don't market jumbo financing or interest-only, jumbo financing to Long Beach. I market first-time home buyer with down payment assistance, or debt service coverage ratio, right? Rentals, right? Because there's a lot of rentals in Long Beach, and there's a lot of first-time home buyers, or non-warrantable condos. Now, I've gotten a ton of deals down there with that, as opposed to Newport Beach and Corona Del Mar. That's more affluent. That's more self-employed borrowers. So I will market self-employed loans to my referral sources down there, interest-only loans to my referral sources down there.
So that's interesting. So you're actually, instead of just doing like a blanket product marketing across your referral deck, you're really getting granular based on demographic and location, picking products, and really going down and being a little more thoughtful on your marketing and what you're pitching to people that they actually need in that market,
Yep.
versus just saying, hey, I'm going to spam this out on a deal.
Yeah.
So that's great advice. So what, so I know we had chatted before, and you, I know this is kind of like the layup podcast question, but in terms of like literature or books that you've read or that you could recommend to people that would, help them understand or sharpen the tool, so to speak. Do you have any recommendations there?
Well, there's one book that I love. It's this one.
Okay.
Never.
So that for everybody, if you're listening in and you can't see it, so Mike's holding up a book, Never Split the Difference. And we'll send this out. I'll send that out to everybody on an email after this at Arbor, that is, so you can kind of take a peek at that and understand. So why don't you give us a quick summary, Mike, on how you use that?
Well, I use that more as a value. Like, you have to know your value, right? Don't sell rate. You sell yourself. You sell your value. The tools that we have, the lenders that we have, the resources that we have, that's part of your value. So, you want to get no rate war. That's not a way how you build your business. You build your business by, knowledge is power. I study different lenders. I study their guidelines. I read their guidelines so that I know when the phone rings, okay, I know, yes, I can do that deal. Like,
I think reading guidelines, to your point, is sometimes of a lost art right now. And I would just look at kind of how the business has evolved.
You're right. Knowledge is power. So if you know the guidelines and you know how they work, and that comes with experience too, right? It's hard because if you haven't gone through, any of these types of different loans, it's, you don't necessarily have that, that flow.
You don't know where to find it. Yeah.
You don't know where to go. You don't know what you're looking for. You don't know what's out there, what you can and can't do. But that's just, walking through different scenarios with different reps and then going through that process from, origination to closing.
Right.
And in my head, I know, hey, I can go here with the deal, or I can go here with the deal, because I know from experience that I can close that. Right.
So what, and I'm going to kind of move, I know we have a decent number of folks in kind of the audience that are at different levels of their career at Arbor. We have some that have been there for a long time, but I do want to just throw in a question there for newer loan officers that may have been in the IMB space and haven't been in the broker banker world very long. What advice would you give them as they come into kind of like, this kind of giant I don't want to say opportunity, but it's a much different product offering that we have. Are there ways or things that you would help guide like newer LOs at Arbor to kind of to focus on certain things or
Sure.
a process there?
Yeah. I mean, number one is you got to compete every day, right? You have to have a yes mentality. And the reason that you can have a yes mentality and you can win a lot of business is because of the resources that we have. So it's a lot.
Do you want to? Can you go into that yes mentality and how that helped with your most recent win on your deal at Freedom?
Sure. So a deal came to me. It was a $6.9 million purchase up in Newport Coast. The borrower had gotten turned down by 3 different banks. He got turned down by Guarantee Rate, Movement Mortgage, and Wells Fargo. They could not find a way to put it together. Based on his income, he had a property he had to sell. He had 4 investment properties. 2 of them were commercial. 1 of them was residential. So when I got the deal, I recognized that he was a veteran. And I thought, well,
how did you recognize that, just out of curiosity?
Because he works he works at the he works at the he worked at the Chino jail, I think it was, as their head lead doctor. And so when I got to talking with him, he told me that he was in the military and he was a one-star general.
So good. So it was basically a conversation you had with them on the opening.
No. And
Yeah,
I said,
that's great. Okay.
So, you were a veteran. Yeah. Oh, great. Yeah. Okay, good. And I didn't even bring up a VA loan. I never even discussed it with him in my initial conversation. In my head, I was like, there may be an angle here to find him the most leverage with a much higher DTI. Not having any of his information. He sends his information over. There was an investment property in Carlsbad. I looked at the mortgage statement, and it was a VA loan. It had a balance of $685,000 on it. He had a property he was selling in Corona Del Mar, his current primary residence. So when I looked at it, I was thinking about going to CIT. He had enough money for 25% down, but then that would have depleted him. And it was still a really tight deal with them, with CIT. So I looked at this and I go, I'm going to try to run this VA. And here's what I'm going to do. So I'm going to sell his Corona Del Mar property. It was listed. It just hadn't sold yet. He was in contract on Newport Coast. So what I did was I set up my file. I put as pending sale the Corona Del Mar property. I took the proceeds from that was $1.3 million. Okay, took $1.3 million. I then showed the Carlsbad property, which had a VA loan on it, because you can't have two VA loans, right? So I needed to restore his entitlement. But before I even presented this to him, this is what I did. So then I showed the Carlsbad property is paid off. I showed my restored entitlement for my DU. I ran DU at a 69% DTI and got him a 10% down loan for $6.2 million.
Winner.
Well, a lot of moving parts, right?
A lot of moving parts, but so I just want to, and like for everybody that's on the call, right? When you go, like anybody, whatever your experience is in the business, right? That I know that's that story. I love hearing when you get into like a true technician of a deal where three people can't put it together. I love that the opener actually is open from a conversation with the client to even identify that they're a VA,
Brian,
right?
Brian, so I had the two loan options ready to go before I even talked to him. I wanted to make sure, because obviously that's a unfathomable kind of situation, right? No one would believe you that you could do that.
Yeah, right.
And I actually had doubts myself. So when I called Freedom, I said, Mike Bennett, I said, Mike, I want to make sure that we can do this. And I had him run it up the chain. He says, well, we don't have a VA limit. And if you have an approved eligible, you're good to go. So, we wanted to make sure that we set it up correctly from the beginning. Like, I didn't want any loose ends going into underwriting, because I wanted to be as clean could be. And so I dotted every I, crossed every T before we submitted it. Krista was great. We submitted it. We just needed to make sure that his property got sold. The real estate agent found a buyer, a developer, a flipper. He reduced his price a little bit because he wanted this property.
Yeah.
So that all came together in December.
What did the realtor think of you after it closed?
Well, let's talk about that. So she double-ended the Corona Del Mar for $3.2 million. So I think she reduced her commission 3%. So that's $90,000, right?
Yep.
Then she made 2.5 on $7 million. So what's that? $140,000.
Yeah. So that's a pretty good payday.
So
for the necessary evil.
yeah, so I've already gotten 3 referrals from her, and that was a gal that I actually worked with before, 4 or 5 years ago, and I actually did a deal for her, a giant loan in Corona Del Mar, which was a bridge loan with Axos, and I never got any more business from her, and I thought she just died on the vine. She was newer at that time, but now she's really well connected. And anyways,
well, I mean, that's just such a great story, right? I think for everybody, for a $6 million or $6.2 million loan that basically was turned down 3 times. And then you're able, by being a loan technician, by being the expert, by having that optionality like you were talking about and knowing how to put it together, right? You not only is it a good payday for you, but it's also the ultimate payday is that realtor now has sent you 3 more deals. And here you, from being the second, not even, you were the 4th choice. Yeah. So and that's again, I almost feel like, and I don't necessarily ever market myself or see myself marketing myself as like the second choice, but I do think for everybody on the call, there's an opportunity here as we open up relationships with realtors. And from what Mike's talking about, even with that success story, that's something to introduce to realtors is like, you need more than one investor. I think a lot of realtors get in bed with one lender and they don't realize the importance of having more than 1, 2, or 3. And I think that's a really important and maybe just an angle for loan officers to get in front of more realtors with is like, do you understand why? Like, let me show you how I can help you close more loans, or at least let me be that second or third option when the Wells Fargo, your primary person, doesn't have this product. And let me just show you what that means, like with all these products I have. So anyways, man, that was an awesome example there. So I'm going to put you on the spot just because we need a shameless plug for Arbor. So dude, what do you liking about Arbor since you've joined?
Well, number one, the community and everybody, for you to have a platform like this, and share it with so many people, what an opportunity for, all of us as originators. You're only going to get better by expanding your knowledge base, and clearly, by far, you guys have set that, have basically laid the path for unlimited income potential, the ability to be able to go anywhere, broker, banker, not a lot of, and I know the competition, they don't allow that, and they penalize you for brokering as opposed to keeping it in-house. And, Arbor's been awesome. The marketing itself, I've never been a huge marketing guy, but I know that it's a different time now, and you need to stay in front of people. But I mean, the resources you have with that, there's no broker, banker, hybrid, whatever we call it. There's nobody doing this. There's not, which is why I was really attracted to come over. And I, as you know, I was at a different brokerage that, had a huge place in the market and well respected, and but we're on steroids. I mean, it's, your platforms, your communication, EOS. I mean, it's a lot. So if you're newer, just hang in there. Like, don't feel so overwhelmed, because I was overwhelmed. Yeah, I've been in this space, but once you get it and you use the resources with marketing, our marketing department is awesome. Like, awesome. You ask them for something, they dial it in. They get creative with it. I mean, every piece I've had great feedback on. And then just what you and Dave and John do. You're always trying to make it better for everybody. And you have that originator thought process, which is, your guaranteed rates and your movements, and they're not thinking about us. They're not thinking about the loan officer. They don't care, right? This is more about family. And
I love that, buddy. That is That is truth. So, well, we went a little bit over our 30, man. So one, dude, I just want to thank you, dude, for being a part of the team and also being our guinea pig here on our first podcast, dude. I'm sure that people in the audience got a lot out of it, man. And hopefully your phone doesn't blow up with Arbor people trying to.
No, I was just gonna say, if anybody's out there and they need help with something or they need advice, or I mean, I try to respond to emails during the day, but I don't get to all of them. But if you've got a weird deal or something like, you can't do or can't figure out, and you think there's an angle, just call me.
That's awesome, man.
Well,
that's help. Part of the community, my friend. And like I said, dude, thank you very much for doing the mind share with us, dude, and kind of letting us pick your brain a little bit in terms of how you work and how you got to where you are as a, as the loan slayer, dude. You get to wear the title, buddy. If you're rocking 70, 80 million in 2022, dude, that the name fits. So thanks, brother.